Good morning. Look at that. It does look like the sky is clearing a bit. Remember when I came to work yesterday, the clouds were rolling in, the sky turned black and dark, and the rain started to come. And that's, in fact, what happened in the market yesterday, right? The clouds came over and stocks took it on the chin. So, good morning. My name is Kenny Polcari. Today is Wednesday, July 27th, 2022, and it is Fed Day. And here are the things you need to know to get your day started. Yes, the results continue to come in mixed, right? Microsoft and Google, they missed, but in fact, they had nowhere to go, so traders took them up after the bell. And Meta reports tonight, so all eyes are going to be on that. Consumer staple stocks remind us that they do have pricing power, so hold on to that thought. And it is the July FOMC meeting, T-minus 8 hours until JJ takes the stage to tell us what's next. And what are we having for dinner tonight? Well, we're going to have the Summer Orzo Salad. It's simple to make, and it is a staple in your summer refrigerator. So look, like I said, stocks took it on the chin on Tuesday. The negative guidance out of Walmart, job losses at Shopify, Microsoft, and a host of others. Revenue and profit declines at Microsoft, Google, General Motors, and more. Cautious guidance going forward by General Electric and everybody else, all while Coca-Cola, Pepsi, McDonald's, Unilever, and Kimberly-Clark made it very clear that prices are going up because inflation at the input level is out of control and that we should not expect to see lower prices on consumer staple items anytime soon, right? This is where the consumer staples have pricing power, which is why they hold up better. Then we got a consumer confidence number that was even weaker than the already weak estimate, coming in at 95.7, down from 98.4, and below the 97 estimate, which just suggests that the consumer is exhausted. And if that's not enough, then came the housing data, right? New home sales. What would they be? What would they tell us about the state of the housing market in a rising rate environment? Well, get ready, because the expectation was for a decline of 5.9%. The actual read came in much deeper, a decline of 8.1%. And it does make sense, right? With mortgage rates now trending at 5.5% up from 2.8, the cost to carry a home, new or existing, continues to rise. And watch what happens today after the Fed announcement, right? When they raise rates by 75 basis points, expect mortgage rates to adjust up on the back of that rate increase. I'm saying closer to 6%. And so home sales, new or existing, start to show some stress, and boom, the bottom falls out. New home sales for June reflected that very concern. And today we're going to get pending home sales. So we'll talk about that just in a minute. So at the closing bell last night, the Dow lost 230 points or 0.7%. The S&Ps lost 45, were down just over 1%. The Nasdaq gave back 220 points or 2%. The Russell gave back 12 points or just under 1%. And the transports choked, falling by 250 points or 1.8%, almost nearly 1.9%. Now, none of this should be a surprise to anyone. We've been talking about this for months now, and we're only halfway through the earnings season, right? Expect more of the same as companies report over the next 2.5 to 3 weeks, right? Companies reporting today include Humana, American Electric Power, General Dynamics, Rockwell International, T-Mobile, Bristol Myers, Norfolk Southern, ADP, Boeing, which missed, Sherwin-Williams, and Hilton Hotels, all before the opening. And after the bell, we're going to get hit with another 30 reports. That includes Ford and Qualcomm, Raymond James, ServiceNow. But the one that is going to keep the millennials on their seat will be Facebook. I know it's Meta now, as Marky Mark tries to distance themselves from that social network mantra to the metaverse. Okay, one way or the other, people are going to be watching metaverse. They're going to be talking about it all day. Now, this is going to be the key for so many, and it's going to reveal so much about the state of the economy because the herd has been convinced that it will. The stock is down 58% from the September 2021 high of $380 a share. Remember, gap down during the first quarter reporting season on February 3rd, falling 25% on the opening trade, leaving a huge hole in the chart. And it's been unable to recover ever since, only going lower in the first 6 months of this year. Although it does seem to be building a base right here at about $159 a share. So today is important. And if it acts like Microsoft and Google, what they did last night after the bell, we could actually see it rise post the earnings. You might even see it rise today during the day as the tone is different, right? As long as the report is not a complete disaster and all the bad news is priced in. Now, look, after the bell, after they reported weak numbers yesterday, Microsoft added 10%. Google added 5%. Both these names have also been beaten up this year, down 25 and 31% year to date, respectively. So the pop was refreshing. Meta this morning is quoted up $5 or 3% in the pre-market, and that's helping to set the tone this morning. Consumer discretionary, XLY, was the worst performer yesterday, down 3.2%. Consumer discretionary, not staples, leaving it down 28% year to date. Communications, XLC, was next, down 2%, leaving that down 30% year to date. Healthcare and utilities were up in a down market, rising by 0.5% and 0.6% respectively. Retail got slammed, down 4.2%. It's down 33% on the year. Disruptive tech, ARC, down 4.8%. That's down 55% in the year. Airlines, jets, lost 2%. And cybersecurity names, they gave back nearly 4%. Not sure why at all. That makes no sense to me other than they are lumped into the tech sector. The value trade, SPYV, lost 0.5%. That's down 10% year to date, while the growth trade, SPYG, gave back 2%. And that's down 25% year to date. This morning, U.S. futures are up. The Dow up 170, the S&P's up 45, the Nasdaq ahead by 205, and the Russell gaining 12. All this as we await the Fed decision coming at 2 p.m., followed by the press conference at 2:30. While the whispers of late have once again been about a 100 basis point hike, my gut says not happening. They would have leaked that to Goldman Sachs if that was the case, so not to catch investors by surprise. I suspect that JJ is going to leave the September door wide open to another 75 basis point hike before slowing down, if he slows down. Here we go again with the guy cutting the lawn. I think he cuts the lawn every day, this guy. I mean, he's killing me. Eco data today includes mortgage apps for the week ended July 22nd, right? Last week, remember, they were down by 6.3%. What's the bet this week, right? We're also going to get wholesale and retail inventories. Durable goods orders expected to be down 0.4%. Ex-transports are going to be up 0.2%. Pending home sales are supposed to be down 1% month over month, but down 13.5% year over year. Tomorrow brings us the first look at the second quarter GDP, and the estimates are all over the place, right? They range from negative 1.6% to positive 0.5%. Consensus is simmering around the plus 0.3% range. That's funny because the Atlanta Fed GDP forecast is the one calling for minus 1.6%, and they are usually spot on. But there's a lot of noise around this data point this week. If we get a negative number, then it's going to suggest that we are in a recession if you use the former definition. I say that because the administration is working very hard to cancel that definition ahead of the report today and change it to something that fits their narrative. So if we get a negative number, I expect that you're going to see Janet and Brian and Jared all say, come on, move on, nothing to see here. It's all good, nothing to worry about. Pay no attention to the man behind the curtain. And if you're still wondering what treasuries are doing, yes, they remain inverted. The 2's yielding 3.03%, the 5's are yielding 2.85%, and the 10's are yielding 2.77%. But again, we don't hear Janet or Brian or Jared discussing this at all. I wonder if JJ is going to bring it up, or if one of the journalists in the room is going to be able to even ask the question, recognizing that all the questions have to be pre-approved before any journalist goes into the room. That's just so they don't catch JJ by surprise. And oil, yes, well, it teased the $100 level again yesterday, trading as high as just $99 before retreating, ending the day down 1.2%. But this morning, it's up 1.3% as the thrashing continues, right? The American Petroleum Institute reporting that U.S. crude stockpiles fell by 4 million barrels last week, 4 times what was expected. Gasoline inventories also fell by 1.1 million barrels versus the expected increase of 3.5 million. The Energy Information Administration is due to report their findings later today. What are they going to say? Oil is also being affected by the Russian decision to cut the flow through the Nord Stream 1 pipeline to Europe. And while we're discussing energy, remember Russia's also cutting the supply of natural gas via the Nord Stream 2 pipeline to Europe, beginning today. And that is sending natural gas up another 1.2%, bringing its July move up 72%, and for the year up 172%. Nat gas is getting very, very expensive, and winter's not even here yet. In Europe, markets there are all higher. Italian stocks are up by 0.5%, while Italian bonds are lower. This after the S&P cut the outlook from positive to stable. Credit Suisse reported a massive $1.6 billion loss versus the expected loss of $400 million. CEO Tommy Gottstein gets the axe. The IMF, the International Monetary Fund, cut global growth projections for this year to 3.2%, down from 3.6%. And for next year, they went to 2.9%, down from 3.6%. The word is that they think the outlook is gloomy and uncertain. Not very positive. In Germany, consumer sentiment dropped to negative 30.6, which is down even further from negative 27.7 last month. Diminishing gas supplies at the top of mind for Germans, but that's because Angie Merkel made them and the most of the Eurozone dependent upon Russian energy supplies. So, how's that working for you when you put all your eggs in one basket? Not so smart. The S&P closed last night at 39.21 after trading in a 39.10, 39.53 trading range. We're now sitting right on the trend line at 39.20. The pre-market action appears to suggest that it's going to hold, at least for today, and it's going to rally. If we rally, then look for resistance starting at the 39.75, 4,000 level. If we push up and through, which is not likely today, then the intermediate trend line becomes resistance at 41.30. We still need to close that gap created on June 10th, which means the S&P has to trade to 4,018 in order to do this. When it does, that will be another reason for further gains, testing that next trend line at 41.30. Look, the list of risks exposes the vulnerability of the latest bear market rally, right? Expect to see, as I said, more volatility, more chop, more weakness as we move through the rest of this earnings season. And remember, then we come right into September, October, which tends to be a seasonally difficult time for the markets. So patience is a virtue. Okay, so it's a gorgeous day. It reminds me, we're in the height of the summer season, and this dish is one you need to have in your fridge really at all times because it's always a staple. So it's a summer salad. You make it with orzo, ricotta salata, which is like a hard ricotta cheese, and spinach, garlic, and oil, naturally salt and pepper, right? You can make this ahead of time. You can make it. You can put it in the fridge. You can use it as a side dish. You can even have it for dinner if you don't really feel like cooking one night when you get home because it is plentiful and it's hearty, right? And it's a great dish to serve at a summer barbecue. So it's simple to make. It takes you no longer than it takes you to boil the pasta. So maybe it's 10 to 12 minutes by the time you start and finish, right? So for this, you need a pound of orzo pasta. You need garlic, olive oil, fresh spinach, ricotta salata, cheese, and salt and pepper, right? Ricotta salata is cheese. I don't mean grated cheese on top of it. Ricotta salata, cheese, and salt and pepper. Now, you're going to bring a pot of salted water to a rolling boil, then you're going to add in the orzo. You're going to let it cook till it's al dente, but orzo cooks quick, so maybe it's 6 to 8 minutes. Be careful. While this is cooking, heat some olive oil in a pan, saute the garlic, just allowing the oil to take on the garlicky flavor. Do not burn the garlic. Now, remove it from the heat and just set it aside. You want to take the ricotta salata, which is a hard cheese, you want to cut it into small bite-sized cubes. Set that aside. Once the orzo is all cooked, you want to strain it. Remember, always keeping a mug full of the pasta water just to re-moisten it a bit. Now, put the orzo back in the pot. Add back a little bit, quarter cup of the water, maybe a little bit less. Mix it up, let it soak it up. Do not leave a puddle of water in the pasta. Wait till it sucks it all up. Now, toss in fresh spinach leaves, right? Uncooked. Add in the oil and the garlic. Mix it really well so that you coat the whole thing. Now, you want enough oil to coat the pasta. You don't want it swimming in oil, just FYI. Now you're going to add in those chunks of ricotta salata. You're going to mix it again. And then you're going to put it in a bowl, and you're going to you can eat it right away. As it cools down, it's fine. You can put it in the fridge. You can eat it cold. It's delicious, and it's always perfect as a side dish to a summer barbecue. The total cost to make this dish should be about $10, maybe it's $12. It's not a big spend, but yet it feeds a lot of people. In any event, look, you can see kind of the clouds above, but they're not dark. You can see the blue sky trying to poke its head through. So maybe it will be a better day in the markets. Until tomorrow, take good care.